Welcome to DWS Market Update. The year 2023 was able to make investors at peace with the capital markets again. Do you remember the year 2022? Unhappily? Well, you could lose a lot of money in almost all asset classes in 2022. The prices of supposedly safe German long-term government bonds lost almost 20%. The DAX lost around 12% and the S&P 500 more than 18%. The prices of 30-year German government bonds even fell by a third. Those who left the capital markets in disappointment at the end of 2022 were left with their losses. Those who stayed invested were in for a pleasant surprise last year. Almost all asset classes that had made losses in 2022 recorded gains in the following year. 30-year German government bonds rose by 8%, the Stoxx 600 by 17% and the S&P 500 by as much as 26%. This raises the question, where do these good figures come from and can they continue? Well, the good performance is partly because many expect a strong rise in corporate profits. We are also expecting earnings growth, albeit somewhat more moderate than the market is doing. In addition, the market expects faster and more significant interest rate cuts by central banks than we do, though there is a certain potential for disappointment here. We would not be surprised if stock prices only rise very moderately over the course of the year. What does this mean for investors? The lessons from 2022 and 2023 that it could be worth to stay invested even or especially after phases of heavy losses. Remembering this could become relevant this year. Because if share prices only rise moderately on average this year, there are three things to bear in mind. Firstly, shares are rather a long-term investment. Time beats timing. Secondly, we should not forget that stock markets are always an option on innovation. The major US tech companies, driven by artificial intelligence fantasies, demonstrated this impressively last year. And thirdly, if the market takes a deep breath this year, these could well be attractive entry levels. With that, I say goodbye until next time.